Hello guys, Zaheer Anwari here on behalf of the dynamictrader.com. Apologies for keeping you guys waiting for a few minutes here, but let's go straight into it. We're finally starting to see a bit of life in foreign exchange, which is great news. We've been standing aside from a trend trading perspective. We've been standing aside for quite a long time, and in trading, your patience is generally rewarded. For people that are new to the webinar, I'm not a high frequency trader, so you're not going to catch me in front of my computer, every day, all day, looking for trades. I'm what is called a trend trader, so I'm looking for the big moves in the market. So I'm looking at the monthly, the weekly, and the daily time frame. What that means is that I only really trade at certain times in the year. There'll be long periods where I'll be standing aside, and that is because on the large time frames, the market is just going sideways. It's bouncing between a level of support and resistance, and there's no real trend direction. So what I do during those periods is I stand aside. But this is the key. When one market's in consolidation, another market's in trend. So for example, the foreign exchange market, if that's in consolidation for weeks or months at a time, usually another market such as US stocks or commodities, they'll be in trend. So as a trader, I don't focus on just one market. I move around from market to market looking for the best opportunities. As we focus predominantly on foreign exchange in this webinar, regular visitors will know that foreign exchange has been very quiet from a trend trading perspective. However, we are now starting to see breakout and momentum in a particular direction. So let's go ahead. Let's go and analyze the charts in front of me. Let's break it down, make sure we understand what the setup that I have, and then moving forward, how exactly have I been trading these particular opportunities. I'm assuming everyone can see my screen. There haven't been any questions coming through, so I'm just going to go ahead and break down the screen setup in front of me. What you can see is a typical chart setup. So regular visitors will be very familiar. On the left-hand side is the watch list. Notice it's an extensive watch list. So the Aussie dollar, US dollar at the top, going all the way down to the South African rand, Japanese yen at the bottom. Now, why do I have such an extensive watch list? And the answer is very simple. Currencies move in groups. So you may have all the Aussie dollar currencies moving at a certain period of time, then they go into consolidation, then all the pound currencies that may start moving, then they may go in consolidation. So even though I've got a big watch list, I'll only be looking at a certain number of currencies at any period of time. Now, as a trend trader, and I'm looking for those big moves, I now need the time frames to be able to trade in that particular way. So what you can see in the top right corner is the monthly chart, bottom left is a weekly chart, and bottom right is the daily chart. So I'm looking at the bigger picture. Monthly is where I look for support and resistance. Weekly and daily is where I look for trend direction. So if we move on to the next page, I'm just going to go to the Canadian dollar, actually, for a very good reason. I'll explain why in a second. So if you go to the next page, you'll see that I now have a certain number of indicators, whereas before we just had the naked candlestick charts, nothing on here, just pure candlesticks. If we go to the next page, you now notice that it looks slightly different. So if we start with the monthly time frame, what I have is my major levels of support and resistance. So as a trend trader, I draw my support and resistance on the monthly time frame. A lot of the times traders go down to a lower time frame, such as the 4 hour, the 1 hour, maybe the 15 minute. And the lower down you go, the more candlesticks. The more candlesticks, the more noise. So how do we then know what are the major levels of support and resistance? I tend to ignore all of that intraday noise and do all my analysis, particularly my support and resistance, on the monthly time frame. What I now have is a very clear picture of what price action is doing. Okay, and this is a proprietary tool which automatically updates itself as these new support and resistance levels are created. Also, I have these pink lines. The pink lines represent the major levels of support and resistance from the previous calendar year. So what we have is the high of 2014, the low of 2014, and the closing price of 2014. As we're now coming towards the end of 2015, and as we move into 2016, these pink lines will automatically change for the high, the low, and the closing price of 2015. Now, these pink lines are very significant, not just as levels of support and resistance, but they can also tell us what kind of market conditions we're in currently. So if we're trading above the high of the previous year, we can consider it a bull market, and we can see that price has been trading above the high of 2014, and it's been in a very good bull run. If price is trading below the low, then we could consider it a bear market. And if it's trading between these pink line levels, then we can consider it a consolidation.
Zaheer, we are not watching your chart, sorry.
Oh, you can't see my charts?
No.
Oh, okay.
Sorry for interrupt you.
That's okay. That's okay. I did a screen share. I did actually share my screen. Okay, let me try that again.
Okay.
Okay, right. Can you see my screen now?
Yes.
Okay,
yes.
I don't know what happened there. That's sorry about that, guys. But I did share my screen through.
It's gone now.
It's gone again?
Yes.
Okay, so there's a problem with the Hangouts because it keeps on dropping my screen share.
Yeah, perhaps you can.
Okay, let's try again.
Yes, please. Okay, it's working now.
Okay, should we just hold on for a second to see if it
Yes.
drops?
It's working.
Okay, seems good.
Yes, it's working now.
Okay, hopefully that's not going to drop again. Okay, brilliant. So I'll just continue.
Yeah, of course.
Okay, fantastic. Okay, guys, so let me just quickly go back to the previous screen. So you guys heard me explaining it, but obviously you didn't see the visual of it. But this is the naked candlestick chart patterns. So, excuse me, the naked candlestick screens, rather. Monthly chart, top right, weekly chart, bottom left, daily chart, bottom right. So looking at the bigger picture, monthly, weekly, and daily. And here is my watch list, top left. If we move to the next screen, you can see that I have my support and resistance levels on the monthly chart, which I was explaining, and also the pink line levels, which represent the high and the low of 2014. And you can see that price is trading above the high of 2014, telling us that we are in a bull market. And we can see that we've had a good bull run so far this year. Now, the weekly and daily time frame is where I look for trend direction. Remember, I'm a trend trader. I'm looking for long-term trends in the market. So I need the weekly and the daily time frame to give me that. So what I'm looking for is the weekly and daily time frame to be moving in the same direction. So in the bull market, I want the weekly and daily going up. In a bear market, I want the weekly and daily going down. In a consolidating market, usually they're out of sync. So the weekly may be going up at times, but the daily may still be going sideways or is in some kind of correction. So I really need to look at the weekly and the daily to give me strong trend directions. How do I do this? Well, first of all, you can see I've got the 200 moving average. That's the simple moving average on both the weekly time frame and the daily time frame. Now, the 200 moving average is a very significant moving average. It's a moving average that's been used before the internet, where the old school traders used to draw everything by hand. And the 200 moving average was proven to give a very good long-term direction of the trend. So we still need to use that same logic. The 200 moving average gives us the long-term direction of the trend. So if price is trading above the 200 moving average, then price has a bullish bias. And that's where I, as a trader, I'm looking to go long. If price is trading below the 200 moving averages, then I'm looking to go short. And I don't go against that logic. I want to be above the weekly and above the daily 200 moving average to go long. I want to be below the weekly and below the daily 200 moving average to go short. I'm looking for high probability environment. Now, this is where a lot of amateur traders or new traders or novice traders, this is where they struggle. And that is with the idea of patience, because it can take quite a long time for certain factors to line up. And if those factors may take weeks to line up, then that is where traders start getting impatient and lead into over trading. However, remember, that's why I have a big watch list, because as one currency is setting up, another currency has already set up. Or if a whole market, such as foreign exchange, is going through a period where it doesn't know what it's doing, another market like stocks or commodities has already set up. So that is why it's imperative to have a big watch list so that we can move between the best opportunities. So if we look at the Canadian dollar, also what I have, if I go back to the naked candlesticks, you'll notice that just your standard red and green candlesticks. However, if you go to the next page, you'll notice that I no longer have red and green candlesticks. I have a trend filter that sits over the top of the bars that just gives me a long-term direction of the trend. So now what I'm looking for is the trend filter above the 200 moving average to be green on both time frames. And if price is trading below the 200 moving average on the weekly and the daily, I want the trend filter to be red. So you can see now how the factors are really lining up. So on the monthly time frame, I'm looking for support and resistance and how far a trend can go in a particular direction. And on the weekly and daily, I'm looking for the weekly and daily to tell me whether I'm going to go long in between those areas of support and resistance or short in between those areas of support and resistance. Okay, so if we start with the monthly time frame, we can see that we are very much in a bullish trend, and we've been in this bullish trend going back to 2011. There have been movements against trend, but this is expected. We cannot expect price to continuously shoot in one direction. Look at this drop here from the high of 2002 all the way down to 2007. That's a 5-year drop in price. Now, if you look at that, there was a drop, then a pullback, another drop, another pullback, drop, pullback, drop, pullback, drop, and then this deep correction. So if you look at this particular trend, price heads in one direction, but it doesn't move in a straight line. So we're seeing that exact same logic here. Move, pullback, move, pullback, move, a little bit of a correction here. And now we're seeing a good move to the upside. Now, if you look at the resistance levels ahead, there's quite a clear run for price to move. What we're now looking at are round numbers. So 1.4, 1.5, and then 1.6. Those are the levels that I would like to see price move towards. Round numbers are very significant. If you actually look at these sort of pivot levels, if you look at this high point here, it's at around 1.6. If you look at the low point on the chart, it's at around 0.9. If you look at this sort of pullback here, it's at 1.1. Now, if you look at this whole pivot level here and this correction here, that's because of the 1.3 acting as resistance and then 1.3 acting as support. So you can see how price reacts to round numbers. However, as the long-term trend is bullish, that is the direction we always want to be going in. Now, look at the month of December. Big move to the upside. Guys, remember, December and January can be very, very profitable times in the market. There's that logic that December is quiet, and that is really just because of the way the system works, the 9-to-5 lifestyle works, which is, we work at certain periods of the year, and then certain times, for example, in summer, especially in Christmas, that's when people start slowing down, and nothing really much happens. We go into holiday mode. That's fine. But in the financial market, December and January are very profitable periods, and you can actually see December is now starting to move. Big move to the upside so far, for about 500 to 600 pips of movement in the bullish direction. What we're looking for is this momentum to continue over the next weeks to months. If we go to the weekly time frame, trading above the weekly 200 moving average, so we have the bullish bias. Trend filter is green, so we have the bullish trend. If I open up the weekly time frame, you can see we had good movement to the upside, taking price through that pivot, the pivot resistance of September. Okay, we had a break and close, and now this week so far, we're seeing good momentum, and this momentum continue. So as trend traders, what I'm really looking for is directional momentum. I know there's a lot of sort of fear around things like volatility, etc. Volatility in a direction is good. Volatility all over the place, for example, what you'll find on lower time frames, that's not so good. But directional momentum is what we're looking for, and this is now what we're starting to see. Price found resistance at around 1.28. Price came down, found support. We had indecision, and we're now seeing movement to the upside. Okay, we've got 1.4 just here, which could prove to be a little bit of a sticking point, but 1.4 is not a major round number. We really want to see price move towards 1.5. On the daily time frame, we can see that price trading above the daily 200 moving average. Trend filter is remaining green, and now price is moving to the upside. Now let's have a look at the movement over the last few days. We had this breakout here, and that was when price broke and closed above this pivot resistance. Break and close. We had movement to the upside. Now look at the next bar. A little bit of indecision, then another move to the upside. A little bit of indecision, another move to the upside. Don't get obsessed with individual candlesticks, things like dojis and spinning tops, etc. Day to day, they don't really mean anything. Dojis and spinning tops are more relevant when you get to major areas of support and resistance. So say, for example, price got to 1.5 and we had a doji or a spinning top. That then is something that we need to be more concerned of, because we've got indecision at a major level of resistance. In between round numbers, in between 1.3 and 1.4, in between 1.4 and 1.5, individual candlesticks should not really mean anything. Don't get caught up in the idea that candlesticks are the holy grail. They aren't. Candlesticks are simply a part and parcel of understanding price action and then knowing how to utilize them in your favor. So what you can see is momentum is continuing to the upside. Price has broken and closed above this pivot. This is the pivot of Monday. So we had Monday's spinning top, Tuesday's doji, Wednesday moved to the upside. I have positions running. My positions have been running since around August, around this level here, when price broke and closed above 1.3. And you can see now these positions, I have 4 positions running, and all of these positions are now in profit, in good profit. As and when price starts to create new highs, that's when I'll start compounding further and accelerating the profit phase. Okay, so instead of me trading intraday and opening multiple positions, I simply trade when trends are in play. I take a few trades, I compound, and then I achieve this kind of growth that we really want to see on our trading accounts. Okay, I hope that's clear. I'm just going to go to the chat box to see if there are any questions. Okay, guys, are there any questions? Can I get a quick yes in the chat box that you guys are with me in terms of my analysis? And, you know, I apologize for all the sniffling, guys. I've come down with a bit of a cold, so I am actually doing this with not feeling 100%. So I do apologize for that. Okay, there's no... okay, there's nothing coming through on the chat box, so I'm just going to assume that you guys are okay. Okay. Let's move on. Let's look at the next currency. The next currency we'll look at is the CAD yen. Now, if you remember at the beginning of the presentation, I said that currencies tend to move in groups. So in this presentation, we're really going to focus on the CAD currencies because that's where we're starting to see a bit of life. Doesn't mean that we want to trade every single CAD currency. What we want to do is look at where the momentum is, then analyze each chart, and then choose the best 1, 2, or 3 out of that group to trade, and then see growth across those trends. So let's have a look at the CAD Japanese yen. If we look at the monthly chart, it's quite messy. We do have periods of trend, but it's generally quite messy. So this isn't, from a historical point of view, this isn't a very appealing chart. However, we are seeing momentum to the downside, and if we do get a break and close below this support of August, then we may see further momentum to 80, and then 70, potentially 60. So there is room for this trend to develop. Right, on the weekly time frame, you can see that we're now trading below the weekly 200 moving average. Trend filter is red. However, we are in this area of consolidation, so we want to see price breakout. If we go to the daily time frame, trading below the daily 200 moving average, and the trend filter is also red. But price is faced with this pivot support level, and you can see that price is struggling. We had a bounce to the upside, which is expected because you have all of those traders that tend to go long of support and short of resistance. That is not the best way to trade. The best way to trade is to go in the direction of the trend rather than trying to pick tops and bottoms. So the smarter way of trading is to wait for price to clear the support and then continue towards 70, 60, 50. And that is more likely to happen than a bounce to the upside. Okay. So CAD Japanese yen, one to keep an eye out on, but we need to see it clear this support level, and then we may see a trend develop to the downside, but not one that I'm looking to trade at the moment. Okay, let's have a look at the euro Canadian dollar. Start with the monthly time frame. Again, if you look at the history of the chart, there are periods where it trends quite well, but then there are also periods where it's sort of quite messy and quite choppy. So, you know, be aware of that. However, look at the movement to the upside in the month of December so far. Big move to the upside. But if you look at the bigger picture, we're trading between those pink lines. So do you remember how I said when price is trading between those pink lines, we don't really want to be caught up in the market. We want to wait till price either breaks out to the upside or the downside. So if price clears the next level of resistance, which is the 2014 high, if it clears the pink line high of 2014, we could then see price move towards 1.6, 1.7, 1.8, 1.92. Those are the levels that we would like to see price move towards. If we go back to 1995, we can see price has been that high before. So there's always a chance that price could go back to those levels. Weekly time frame, trading above the weekly 200 moving average. Trend filter is green. Daily time frame, trading above the daily 200 moving average. Trend filter is green. So everything is suggesting momentum to the upside. However, as price is trading between those pink lines and is within those consolidation level, for me personally, I'm happy to stand aside until price clears out of this level, this zone, and starts creating new highs above the high of 2014. So a little bit of patience for now, for me personally, from a trend trading perspective. Okay, pound Canadian dollar. Start with the monthly time frame. So we can see that we had a trend to the downside. And if you look at the length of the trend, that's 2007 to 2010. Big trend. After every move, price consolidates. If we look at the length of the consolidation, 2010 to 2013, that's a 3-year consolidation. The longer the consolidation, the bigger the breakout. Look at the move to the upside. Okay, so that was a very profitable period. So this is going back to 2013, 2014. This is a very profitable trend where price went from around 1.65 to around 1.85 before this correction, which stopped me out of my trades. This was a 2,000 pip move where through my compounding, I made just over 10,000 pips. So a very, very good profitable trend. That is what we want to see price repeat. So now we can see we had a correction. Price then trended to the upside, a little bit messy. So it wasn't the easiest to trade. However, it's looking very positive now. Why? Because we're above the high of 2014. That's very positive. We are also above the high. We're also above the figure 2. The figure 2 is a major level of support and resistance. We can see that price broke through that, came back to retest it. So a little bit of indecision. That's always expected. And we've now had a bounce to the upside. Price is faced with a round number resistance at 2.1. If price clears this, then we would like to see price move towards 2.5. That is my projection for this particular currency pair. We would like to see price move towards 2.2, 2.3, 2.4, ideally 2.5. If it clears this, then we could see price move as high as 2.7, which is where price was back in the 90s. So there is ample space for this trend to develop. So definitely want to keep an eye out on. Weekly time frame, trading above the weekly 200 moving average. Trend filter is green. Daily time frame, trading above the daily 200 moving average. Trend filter is green. If you open up the daily time frame, look at the movement to the upside. We've had a bounce to the downside, and that's because there's resistance here and the round number 2.1, that expected resistance. But we've had movement back to the upside so far today. We want to see this movement continue. Price break through this level. A break and a close above here will suggest a continuation of the long-term bullish trend. I'll be standing aside until we get the correct setup. If I just take price action to that last trend, so this is where I was last involved, heavily involved in this currency, and you can see that price broke out of this consolidation around 1.65, around this level here, and then we had this good trend establish itself before going into another round of consolidation. So we want to see that same thing happen again. We want to see price continue to the upside in that neat, clean fashion. And you can see how when it does trend, it trends very well. Trend, flag formation, breakout, pullback, breakout, pullback, breakout, consolidation, breakout, pullback, breakout. So you can see that's what we're looking for. We want those neat linear trends that will establish over weeks to months. We don't want to just get caught up in that short intraday movement where we're in and out of trades within minutes. Okay, pound Canadian dollar, definitely keep it on your watch list, but wait until we get the breakout. Okay, let's have a look at the New Zealand dollar, Canadian dollar. I think that is the last currency that we'll look at. So New Zealand dollar, Canadian dollar, start with a monthly time frame. Guys, look at the month of December. Big move to the upside. However, if you look at the history of this particular currency, not great. Very choppy. Trends are short-lived. Just not a very good currency to be getting involved in. Remember, the history of the chart can, in a way, tell us how this is going to behave going forward. That is the whole point of technical analysis. Looking at the history, looking at chart patterns, and looking for those patterns to repeat. If the history of this particular currency or any particular currency or stock or commodity has been quite messy, then we could, in a way, anticipate that future price action is going to be quite messy as well. But having said that, price is stuck between those pink lines. Until it actually clears this pink line and the figure 1, which is up here, this is not a currency that I would particularly like to get involved in. But you can see the point of this presentation is to show you how all the momentum is really on the CAD currencies at the moment. We then need to be selective which currencies that we want to trade. The best way to do it is to look at all the currencies as a group and then eliminate the messiest ones, and that will leave you with the best currencies rather than try and trade your favorite currency. That is a big mistake that a lot of people make, which is, oh, the pound Canadian dollar is a favorite. Any currency is only your favorite for as long as it's paying you. As soon as it stops paying you, it's no longer your favorite. So the best way to eliminate charts is rather than have attachment and emotion to a particular currency, you're better off looking at all the groups together and then eliminating the worst chart. That will then leave you with the best currencies to trade. New Zealand dollar, Canadian dollar is not one that I would be looking to trade until it clears the figure 1. If it clears the figure 1 and continues to show good directional momentum, then I may look to trade this. But for now, the dollar Canadian, the dollar CAD, and the pound CAD, and potentially the CAD yen, those are the best looking currencies for me. If we go to the weekly time frame, trading above the weekly 200 moving average, trend filter is green. On the daily time frame, trading above the daily 200 moving average, trend filter is green. So you can see we are having good momentum to the upside. If I open up the daily chart, look at the movement to the upside, guys. You can see that pullbacks are very short-lived. We're not having deep pullbacks like we did here. Here's a deep pullback. Here's a deep pullback. You know, we're not having this at the moment. What we can see is just price moving quite rapidly in a particular direction. And that's quite a positive sign because remember, the longer the consolidation, the bigger the breakout. The foreign exchange market has been in consolidation since before summer. So it's been in consolidation for months. The longer the consolidation, the bigger the breakout. And the breakout can happen and price can move very, very quickly. And this is a very good example of that. Okay, those are the charts that I want to look at. I hope you guys found that useful and it made a lot of sense. I have about 5 minutes left before I call time on the webinar. Are there any final questions that you have, or are there any currencies that you would like me to go through? Please put them in the chat box. A little message there because the chat box seems very quiet. So, okay, thank you, Carilo. Oh, okay, thank you. Okay, there's no questions coming through. Maybe there's no one sat in on the webinar. I think everyone is awaiting the Fed. Yeah. Why? Why are you waiting for the Fed? You know, it's as private traders, you know, news is not going to affect us. News is intraday. Big dogs, hedge funds, institutions, they all get the news before you will even hear of it. So, you know, there's absolutely no point waiting for the Fed information. Now, you know, the mistake that a lot of people make is that they try to copy hedge funds. They try to copy institutions. A lot of private traders try to adopt the approach of the institutions. Institutions have billions to play with, billions. So how can a private trader who has a few £1,000s try to copy the style of trading of a hedge fund. It just doesn't make sense. What we want to do is understand how the hedge funds trade, and then use them to do all the hard work, really, to really cause directional momentum in the market. And then by holding positions, seeing growth in your account. So actually, they are doing all the work. We're simply sitting back and enjoying the ride and watching growth come into our trading accounts. So, you know, if people on this webinar are more focused on what the Fed has to say as opposed to what I have to say, which is as a private trader, and a lot of you guys want to achieve the status of being a full-time private trader, then you really need to change your focus. Change your focus more on long-term technical analysis and long-term trading, rather than focus on what, you know, Draghi has to say, or what Yellen has to say, or what what other news items are out there. You know, guys, you really need to start rethinking your whole approach. Carlos, I can go through the euro dollar. That's not a problem. Let's have a look at the euro dollar. Okay, start with the monthly time frame. Okay, you can see that we were in this long-term bearish trend, very profitable trend. After every move, price consolidates. Now, ideally, in the month of, if I just move back price action here, in the month of October and November, we had good movement to the downside. What we would have wanted to see was this continue and for price to go towards 1, then 0.9, 0.8, 0.7, 0.6. That is what we want to see. However, we can see in the month of October, we've had a move against trend. So a big bounce to the upside. On the weekly time frame, price is trading below the weekly 200 moving average. Trend filter is red. On the daily time frame, price is trading below the daily 200 moving average. A pullback to the daily 200 moving average. Trend filter is sort of quite messy. Red, green is alternating. What is that telling us? That price is just stuck in an area of consolidation. So if you compare the euro dollar to the US dollar Canadian dollar or the pound Canadian dollar, this doesn't look as interesting as if we go to the Canadian dollar. And if I open up the daily chart, you can see that the Canadian dollar is already in trend. Good movement to the upside, and we should just see this trend hopefully continue. So the euro dollar is not something that I am currently interested in trading from a trend trading perspective. Do you think the Central Bank of USA trade against Central Bank of Japan? I don't really know how to answer that. It's not something that comes into my analysis. If they do, it doesn't really affect me because I have the charts telling me all I need to know. So these kind of things, this kind of information, it's really irrelevant. You're better off having a big portfolio and then really taking the best trends in play as opposed to trying to figure out which bank trades against which bank. Pound Japanese yen, we can have a look at that. Guys, sorry, apologies again for the cold. Pound Japanese yen, bullish trend, big bullish trend. Price is now in a consolidation. The fact that price is just consolidating on the pound Japanese yen instantly tells me I'm not interested. Also trading between those pink lines. If price breaks out to the upside, clears 200, then we can see price move towards 250. That's a move of around 5,000 pips. That will be far more interesting than trading within this consolidation. Weekly, trading above the weekly 200 moving average. Trend filter alternating between red and green. Daily time frame below the 200 moving average. So a weekly above the 200, daily below the 200. So you can see that the biases, the long-term biases are out of sync. The long-term trend is telling us bullish. The short-term trend is telling us bearish. It's not a good chart setup. Trend filter is red on the daily. It's red on the weekly, but biases are not in alignment. Plus, we're in consolidation on the weekly time frame. So the pound Japanese yen is not a very good looking chart. If price clears 200, so if we have correction back to the upside, if price clears 200, this is when I'll start being more interested in this. But for now, this is not a very good looking chart for me. I hope that makes sense. Guys, I hope my analysis is really starting to make sense with you guys. New Zealand dollar, US dollar. Yeah, we can have a quick look at that. And I think this will be the last chart. Yeah, New Zealand dollar, US dollar, monthly time frame, long-term trend is bearish. However, look at what's happening. It's stuck in consolidation, a pretty deep correction and big momentum to the upside in the month of December. So just by looking at the monthly chart, I'm not interested. Daily chart, weekly chart below the weekly 200 moving average. Trend filter is red. Daily chart, yeah, it's below the 200 moving average, but the trend filter is green. So if you look at both time frames, they're out of alignment. The bias is good, bearish on the weekly, bearish on the daily, based on the 200, but the trend is out of alignment because we're red on the weekly, green on the daily. And if we actually look at the daily chart in more detail, we had a trend to the downside, and this is where I had short positions running. So I had some short positions running here. These got stopped out on this correction here. So I made a little bit of profit, nothing great, but I made a little bit of profit. Price then corrected, triggered me out of my positions, and has since been in consolidation. So until it breaks out and creates a clear trend direction, not something I'm interested in. Okay, guys, I hope that all made sense. Thank you for attending this week's webinar. If you have any questions, if you would like to contact me, please email me on zaheer@tdtpro.com. I'm just putting this in the chat box. Yep, zaheer@tdtpro.com. If you'd like to contact me regarding a little bit more about the software that I use, the analysis, then please drop me an email. Also, if you guys are on Instagram, please do a search for me on @fx.mentor. Let me just see if I can do a screen share here. Bear with me 1 second. I'm just going to change screens. Okay, so I hope you guys can see my screen. If you can see my screen, please follow me on @fx.mentor on Instagram. The website is the dynamictrader.com. Please have a look at that. For free blogs that are on foreign exchange, commodities, currencies, please go to the dynamictraders.com. Someone's just asked about analysis on the Dow. There's already a blog up on the US indices that will answer your question. Okay, so those are the websites that you need to be aware of. fx.mentor on Instagram, the dynamictrader.com, and the dynamictraders.com. One with an S, one without. Okay, guys, thank you all for attending this week's analysis, and hopefully see you guys all next week. A little bit more interaction would be great. I would like to start discussing more things with people. Any ideas on Dow Jones, please? If you go to my Instagram, fx.mentor, I have another webinar which I'm doing at 6 p.m. UK time, so it's in an hour and 10 minutes. That is when I do more in-depth analysis on stocks. So if you want to join me on the next webinar, please go to, I'll just put this link in the chat box. Maybe that might be easier. Bear with me. Okay. Right, there you go. That's my Instagram. If you guys click on the link in my bio, that will send you to the registration for my webinar, my next webinar, which is coming up in an hour and 10 minutes. In that webinar, I do foreign exchange and stocks. Okay, foreign exchange and stocks. Quite an in-depth analysis on stocks. We look at the indices as well. Okay. Right, so hopefully see you guys on the next webinar as well. Thank you very much, Maurizio. Again, apologies for being a little bit late, and apologies for my sniffly nose. Have a great end to the week, a lovely weekend, and see you all hopefully next week. Take care, guys. See you later. Bye-bye.